Right now, the U.S. economy is in a Recession situation where the rich are under great pressure. Richcession is a new word recently proposed by the 월스트리트저널 as a combination of rich meaning rich and recession meaning economic downturn. Unlike the unusual recession, the Recession is a phenomenon in which economic deterioration hits the high-income class more heavily than the low-income class. In face-to-face service jobs, where there are many low-income classes, wages are rising due to the shortage of manpower. On the other hand, the high-income class is suffering from falling asset prices, such as stock and real estate. This banking sector crisis is not the subprime crisis, but the 슈퍼프라임 crisis. The 2008 financial crisis started from below. Now the problem started on the top floor. Banks serving wealthy customers are under pressure as the U.S. Federal Reserve raises interest rates. Silicon Bank and Signature Bank were banks that provided loans to wealthy people with excellent credit ratings. After the subprime mortgage crisis in 2008, there was a strong perception that services for wealthy customers were safer. Conflicting with this perception, this banking crisis is quite a turn of events. In the case of Silicon Valley, large IT companies announced the large-scale job cuts one after another. Many high-income earners have fallen into unemployment. One of the causes of the bank run was that these large depositors who had been trading with the SBB lost their job and withdrew their savings. When the SBB bank runs occurred, it was the rich who had deposits of $250,000 or more that brought down the SBB. Most of the deposits that escaped were large deposits of more than $250,000. Silicon Valley's large venture capital, VC, and startup executives hastily withdraw huge amounts of funds from SVB. Now the United States had declared unlimited deposit protection. Prior to that, the U.S. financial authorities legally provided deposit protection for up to $250,000. SBB's customers were relatively wealthy companies, VCs, and startups that had attracted investment. They put a bunch of money in the bank during the pandemic. On the other hand, rich customers did not use their loans well. Rather, they found higher interest rates and easily took money out. Banks had no choice but to put their surplus deposits into government bonds and mortgages. When the Fed raised the interest rates, these investments ran into trouble. As interest rates rose, VCs and startups began withdrawing deposits. Eventually, SBB suffered massive losses in government bonds and mortgage investments and collapsed with a bank run and bankruptcy. Signature Bank, which closed along with SBB, is not much different. These local banks were often so-called jumbo mortgage operations, dealing with high net worth individuals, borrowing money from a bank when buying an expensive house in big cities such as New York and San Francisco is called jumbo mortgage. Signature is in New York, SBB is in Silicon Valley, and First Republic Bank, whose future is uncertain, is a regional bank in San Francisco. These banks handled jumbo mortgages of $720,000 and up to $1 million. Wealthy people deposit large sums of money in this bank and at the same time borrow large sum of money to buy expensive house. Jumbo mortgages usually have lower interest rates. It is a loan product that cannot be ignored from the bank's point of view, but it is not necessarily highly profitable. This is especially true when market interest rates rise. A big problem is that jumbo mortgage bonds are less marketable when the banks run hit. They couldn't recoup the loan by selling their jumbo mortgage to another financial institution. Jumbo mortgages cannot receive guarantees from mortgage guarantees such as Fannie Mae and Freddie Mac. Since there is no guarantee, they must sell their jumbo mortgages to a third party for a deep discount to repay the loan early. In the end, take a loss. One of the reasons banks with a lot of wealthy customers are under pressure during interest rate hikes is jumbo mortgages and insufficient lending relative to demand for deposits. Jumbo mortgage is a product designed to finance the purchase of expensive real estate. Because jumbo mortgages are not guaranteed by government-backed institutions such as Fannie Mae or Freddie Mac. They are generally difficult to market and are often held by banks. Banks offered jumbo mortgages to wealthy customers suffered from taking on mortgages that were fixed at low interest rates and depreciated during interest rate hikes. The rise in market interest rates also caused the price of securities held to fall. Because wealthy customers in particular don't need loans on the daily basis, banks serving them have been forced to hold more securities to meet demand for deposits, which had grown faster than demand for loans. In a situation where banks have held a large amount of securities, market interest rates have risen, making it difficult to sell securities with relatively low value, even in event of deposit withdrawal, and this has led to a crisis.